existing home loan customer or in the market to buy a new home on mortgage, get ready to shell out 0.5% more on your home loan. RBI, that's the central bank, has announced the third consecutive rate hike today of 50 basis points. Now, banks and housing finance companies have already passed on the past two hikes of this year, adding up to 90 basis points, which translates to almost 1%. We are talking about 0.9% to the end customer. Now, home loan rates have moved from the historic low of 6.75%, which we saw during the pandemic, to 7.5% and are now all set to move to 8%. So that's how the trajectory is. Now, what are the smart things to do so you can cushion the impact of rising home loan rates, and what does this mean for demand for new homes and apartments? As I begin the discussion, you can call in with your specific home loan questions or the experts to answer. And let me tell you who my guests are today. We've got with us Adhil Shetty from Bank Bazaar. We also have with us NIRANJAN HIRANANDANI, founder and MD of HIRANANDANI Group. He'll be joining us. And we have with us Snehil Gautam, Chief Growth Officer, Housing.com. Now, Adhil, I'm going to come to you first because, I saw a very interesting point in the Bank Bazaar report. I think you had anticipated that rates are going to go up. It was not a surprise to anybody because of inflation. What you said was that when rates move up from 6.5% to 8%, and if you take a 20-year loan, then literally you're paying for 8 more years, which is you're indebted for almost a decade more. Now, we know that rates are flexible. They could go up, they could go down, but this obviously means that people have to now get smart about their home loans, isn't it? And managing it better.
Yeah, absolutely, Manisha. So like you pointed out, very interestingly, right, when the rate goes up, typically what happens is the EMI tenor gets elongated. So, banks prefer not to increase your EMI because, it creates a fluctuation in how much you need to pay. So what happened between the 7% and the 8.4, what was that you ended up paying 8 years additional EMI. But let me give you another pro tip, which is really interesting. If you prepay 13 EMIs, you pull back the 8 years of additional payment. So if you prepay 13 EMIs right now, because that dramatically reduces the outstanding principal, you can cut the extension. So I think this is a two-way effect. Every time the repo rate goes up, your tenor goes up. But every time you make a prepayment, your tenor comes down. So you need to be ready to fight back by prepaying your home loan.
So you're saying prepay a little bit, maybe even just 1 month EMI at the beginning of the rate cycle hike, and that itself could cushion the impact to a large degree. Snehil, most banks and housing finance companies are quick to raise rates, but they're not very quick to bring down rates when the cycle turns. So here's my question to you. At this moment, I'm sure the messages are going to go out to customers and home loan borrowers that, look, your rates are going up and we are going to settle at 8%. It's almost given. We saw the rates appear on the chart. Most of the banks are already, including HDFC, are at about 7.5%. If there is some room to negotiate, how does one do that? And suppose a particular bank is taking it beyond 8% and you are getting 8% elsewhere, what would you recommend to the customer?
So very interesting, Manisha. I mean, we have seen significant jump in repo rates, and that will eventually lead to higher home loan interest rates as well. I think for consumers, as Adil rightly said, it is time to be very intelligent about the prepayment stuff, how you can, prepay more, so that you do not increase the tenure of your home loans. And whenever you see the differences in the interest rates from the banks, it's time to be intelligent and, do the balance transferring, do hard negotiations with the banks. And I can tell you with experience that you will see lots of balance transfer happening in the next few quarters. And the consumers need to be, really, really ready about the opportunity. And there will be opportunities in coming few quarters. So, yeah.
I think one of the things that most people do recommend is refinancing home loans. Adil, very quickly, I'd like to understand from you, at what cost do you refinance? I mean, do you wait for at least 0.25% less from another financier before you decide to take on the processing fee and incur all the cost and the headache? Or do you think even a 10 basis point or 15 basis point is good enough for you to refinance if you've got still about 10 to 15 years of your loan left?
Got it. So the exact answer to this depends upon where you are in your home loan, because there's a big difference if you have a longer tenor, right? Even a small difference can result in a higher cost. So I'll tell you the right way to do it and a back of the envelope way to do it. So the right way to do it, right, is see what your savings in EMI are if you refinance from your existing loan to the new loan, but subtract the cost of switching. So typically there's a cost of switching, which is your registration, stamp duty charges, which can be, several tens of thousands of rupees. There's a processing fee. But you also save in your EMI and your interest outflow. So you can use an online calculator, which, you can get on the bank site, you can get on Bank Bazaar. Or the other back of the envelope we say is if your tenor is long and you're saving, 0.25%, do consider doing it and running the calculation.
Okay, Mr. Hiranandani has joined us, so let me get his perspective also. Mr. Hiranandani, right now we were just working with very, very useful tips for our viewers on what they should do, because everyone's bracing themselves for now 8%. And when you've got used to 6.5% and 6.75%, it does pinch. No one likes to pay more. And this is coming on the back of rising housing prices, because steel, cement, input costs are also up. How do you think the impact will be? I mean, we are round the corner this year. We have early Diwali, but I think this is likely to dampen the sentiments. What are you estimating?
Manisha, my friends are absolutely correct. Of course, there's going to be a dampening of sentiment in the short run. But I've not heard of anybody not buy a house because of the interest rates of home loans. Because you remember, most of the home loans are 15 to 20-year loans. And while the interest rates are going up now, it's also going to come down in the future. So it's not expected that the inflation rates will be so high. And you're going to see a downward turn maybe little later, possibly when the Ukraine-Russian war gets over. I don't know when, but it will at some point of time. And these issues in terms of inflation will keep under control. So I think while you're seeing these high rates of 7.45, etc., you're also going to see a downward trend, maybe by the end of the year. So that's one thing. Second, the averaging out of these interest rates have to be considered as far as that is concerned. Bridging and other things, of course, opportunities are taking. But Manisha, let me give you a statistics which I have been very happy about, was the fact that most of at least 50% of people who borrow 15 to 20-year loans from the banks and financial institutions prepay in half the time, in 7 years. 50%. This is an Indian phenomena which does not take place anywhere else in the world. So the prepayment that we have talked about, which we are recommending to the customers, is already happening. People are already doing it. Whenever they get to sell some shares, have some other profit, able to get some provident fund amount, they're already doing it. The Indians are already thought process as far as home loans is concerned. The third important point
I agree with you, Mr. Hiranandani. I think as a nation, we don't like debt too much, and that actually protects us better from the rest of the global economy, because we are not a heavily consumer-indebted country. All right, I think we have
Manisha,
a caller.
One more point, Manisha.
Go ahead, sir. Then I have a caller waiting for me, so that's why.
No, just one issue. You will not believe that the home loan lending in India has the lowest NPA in the whole world. In the whole world, less than 2%. So all banks and financial institutions want to give money for home loans because the NPA is extremely low. America is amongst the highest NPAs that you can possibly get because of subprime and other activities.
So Mr. Hiranandani, that means that more people should be running after business and giving the most competitive rates in the market. All right, we'll get Shrikant on. We've got a caller with his question. He joins us from Hyderabad. Shrikant, go ahead. What question do you have for our experts?
Hi, good evening all. Just wanted to check. Initially, I have taken, home loan for 6.9%. And recently, in the recent past, it got hiked to 7.5%. I mean, 1 month back I checked it. And now it is based on the, RBI, announcement on the home loan thing. will it, again 50 basis point means 0.5% will increase, and how does it impact on my, home loan? Just wanted to understand that.
Okay. Adhil, take it forward. I mean, it will go up by 0.5% to answer Shrikant's question. But if you can just, we've discussed some of it, but is there anything else you'd like to add in terms of how he should be prepared for it?
Right. So in terms of timing, right, Shrikant, what happens is you've taken most likely a repo rate loan, because all loans that have been done in the recent past have been repo linked loans. That's what the RBI is mandated for faster transmission. So if you were at 6.9% on April 1st, not only did you move up by 50 basis points, you actually moved up by 90 basis points, because the loan resets every quarter. So you probably got a letter which said that on July 1st, your 6.9% has become 7.8%. Now, basis what happens today, right? Your next reset typically comes in a quarter. So you are going to receive a letter saying that on October 1st, you're going to be paying 0.5% more, which is today's hike. Now, let me just quantify this for you. And I think Manisha had done it at the top of the show. When rates go up from 6.9% to, let's say, 8.3%, which is what's going to happen to you, your outflow is going to be either 4,300 rupees higher on a 50 lakh EMI. I'm taking a 50 lakh loan example. Either you're paying 4,300 in higher EMI per month, or you're paying 8 years extra of EMI tenor, which is because of the increase in the repo rate. So the solution, right, is prepay, and prepay as much as you can. I know this is tough, but if you prepay 13 EMIs right now, the additional EMI tenor disappears. 8 years of extra tenor disappears just because you gave a lump sum of 13 EMIs now. But if you don't have that kind of money, right, do what Mr. Hiranandani said. Please prepay whatever you can. Even 5% of your outstanding principal every year can save you several years on the back end.
Okay. Snehil, my follow-up question to you is that, I mean, already as I was in the green room today, we had a makeup artist asking me, now what happens? How do I go ahead and get, he's already sitting on an 8% sort of a interest, and he took his loan 2 months ago, so he's already paying a little bit extra. Is there a way that, let's say he gets, somebody who's already sitting on an 8% and he gets a notice that it's going to now go up to 8.5%, can he actually negotiate to at least keep it at 8.25%? Would you say that fight hard and first try and get your own lender to be, the most rational and give you the most competitive rate in the market?
Yeah, so Manisha, in my view, it's going to be tough to negotiate, because if the repo rates goes up, mostly all the banks, all the NBFCs will raise the interest rates. So my view is, again, the recommendation will be to prepay and try to negotiate. Hard negotiation sometimes works, and it has worked in the past. And but the intelligent way of handling this increase in repo rate and interest rate will be the prepayment piece.
Okay, repo rate and interest rates. Mr. Hiranandani, the reason that we are in such an inflationary environment is because we've got oil, which is the biggest culprit, and of course all the commodities and inputs which have gone up. Now, it's not necessarily because of excessive demand. It's mostly because we had a war disruption and we had a COVID supply chain disruption. So, is there this sense that, it'll also probably go away very quickly? I know that central bankers don't have any other option but to tame it with some rate hikes. But what is the outlook? Are we going to get more hikes this year, or do you believe we'll start normalizing?
Manisha, India is a different country completely. If you want to control inflation, there are two methods to do it. One, the monetary issue, which is handled by the governor of the Reserve Bank of India, which they did just now by hiking the interest rate. The second is fiscal intervention by the government of India, which they did for the purposes of reducing the price of oil, which they did, and also block exports of steel and other products in order to bring those prices down. Now, if only the RBI governor had done its job and the central government did not do the job, we would have gone the Pakistan way or the Sri Lanka way, where we would have a problem, because at the end of the day, the cost of interest cost would have been added to the inflation cost, which is actually taking place. So I saw a beautiful move by Prime Minister Modi, Nirmala Sitharaman ji, for the purposes of making a fiscal intervention. My belief is, if the day the war in Russia and Ukraine get over, you will find that India will turn down this interest rates very, very fast. And I do hope that war doesn't last too long. It's difficult to say. I thought it would last only 10 days. It has lasted several months. But I do hope that by Diwali this year, it should get over. And if it does, I think you will find the interest rates coming down again.
I'm going to do another show just to make sure that...
There's one more point. Mm-hmm. There is a methodology by approaching the banks and financial institutions of wanting to keep the EMI same, but increasing the longevity of the period of the payment. But you again step it up over a period of time. Okay. So as was suggested, which is the best suggestion of all, which is to prepay. The other is to keep the EMI into that level and increase the period. If you have got, for instance, you have paid 50% of the amount already and you cannot pay. I mean, some people are helpless. They just cannot pay the higher amount. You can negotiate to keep the EMI same and ask for a longer period of loan. That's also a possibility in the short run.
That automatically happens, sir. That automatically, if you don't pay EMI extra.
Manisha, you can reverse that once you get some money or increment in salary. You can do that later on. So there are flexible moves that you can negotiate. But as was correctly pointed out by the panelists, it's not easy to do those things, because they would normally look at the hike as a more aggressive measure by the financial institution.
Right.
But many of the banks and financial institutions do negotiate this type of activity.
Okay, so they are flexible to negotiate your payment plans, but they are not flexible in negotiating lower interest rates than what they will pass on all of it, because we've seen that lenders have passed on the last 0.9% or 90 basis point hikes that we've seen this year by the central bank to the end customer in home loans or personal loans or car loans. All right. There's another interesting thing that we're going to discuss after the break. Now, some of the developers are actually now coming out with a scheme where they're locking in home loan rates for 3.5%, saying if you come and buy a house from us, we're going to give you a home loan or make a home loan possible for you at 3.5%. Now, are there any hidden costs to it? Why are developers doing this? Because in my mind, there aren't any free lunches. Let's come back and talk about that. Stay with us. Welcome back. RBI has announced another 50 basis point hike in the repo rate, which means that home loan rates are now back to pre-COVID levels of around 8%. What we showed you are the current home loan rates. So today's rate, if they're 7.5% and roundabout, are likely to go up to 8% in the coming quarter. So how do you negotiate a good deal with your bank? We've discussed some of the big points, and we've got another caller, Dr. Satish from Bangalore, with us to ask our experts a question. Dr. Satish, go ahead, sir. How can we help you?
So my question was, I have two properties, and the first property I've already paid EMIs for close to 10 years, and the second one is like about last 3 years. So earlier we had a good tax benefit, like the entire interest component on the second loan was, I got the maximum benefit, but I think somewhere around 2017-18 they changed the rules. And from my CA, I learned that, okay, this loss is carry forward, but I don't get that benefit like over the next 8 years or 9 years.
Yes, that's true.
So if and the panelists suggested that I have to prepay and that would be the best way. But is there any tax benefit when we prepay? And so whether the loan which has just 2-3 years or 10 years, which one?
Okay. Adhil, falls squarely in your box. Go ahead.
Yeah. So I think obviously in any situation, it's best to talk to your tax advisor. But that being said, right, when you prepay, you're prepaying principal. So you can claim that under the deduction available for principal, which is the ATC. The thing to note is you're probably using ATC for your life insurance and for your tax saving mutual fund, but ATC is where the principal repaid would be, and that's where the prepayment goes. Now, as far as the rented out second home, right, I do believe that tax benefit still exists where you can claim a deduction on the interest component, but under certain conditions, such as it being rented out and, you know, the rental income being taken into account. But like I said, for a specific issue like this, please work with your tax consultant.
Work with the tax associate. So the other thing, Mr. Hiranandani, I did see when we were doing our research that some of the financial institutions and banks do give a slightly lower interest rate for women. I mean, in your experience as a developer, is that used quite widely, or is it still a very, very small percentage of families which use that?
To be honest, Manisha, I don't think people transfer a flat to the woman just for the saving of 30 basis points or 40 basis points. I don't think I see many of the transfers taking place. But many of the women definitely take benefit of that. So I wouldn't say that it's a thing which actually brings about a decision making to transfer it. But those where you want to buy it in the name of the women definitely take advantage of the banks and financial institutions which give that benefit. So the answer is yes, people do take advantage of it, but it's not necessary that it's a turner into taking a decision of taking it in the name of the wife, because the amount is of extra benefit is not so high. So I don't think it is. Number two, it also depends on whether the woman is earning, because you get a benefit of a tax benefit in terms of the deduction against your other income. So if the woman is earning, then it's a different story. But if she's not earning, then usually the benefit of the interest component does not give an advantage to the woman by a lower rate of interest, because you then deprive yourself of the tax deduction which is there.
So what I'm hearing is that people will just not buy a property, or families will just not buy a property in a woman's name because the home loan rates are slightly cheaper. Of course, if at all it's a single woman who's buying a home, or she's an employed woman, then maybe the consideration is there. Snehil, let me come to
One more point on that, Manisha, is that many of the states have given lower stamp duty rates also.
Yes.
So if you combine the two, there is an action to do it in the name of a woman, and under the PMAY scheme also there is an additional benefit. So between the three things,
sir, we've run out of time, but
there could be a turning point. There could be a turning point.
All right. So thank you, gentlemen. Snehil, I had to come to you for one last question, but we've completely run out of time. Thank you for making the time for this call-in show. important that people know what they need to do with interest rates rising. Thanks again. And of course, like our panelists said, they could start coming down very quickly soon. So in the meantime, please take our expert suggestion and try and prepay some amount so that your tenure doesn't become unmanageable. Thanks so much for watching.